take us through the kind of sense you're making of the market at the moment, because, you know, we're looking at all these positives at play. We're looking at all the expectations of the NSC possibly on an looking to be triggered on an upward move, and yet that positive move not filtering through.
That's absolutely correct. On the NSE 20, we hit 4,576. We've come at least 200 and plus points below that level. And actually, I had 4,482 as a key level on my chart. So I think, I'm looking at it with some circumspection now. I think, the market is not reacting as it should be reacting. We've got to look at this a little bit more closely and see whether the pullback now comes to completion, which the bulls really require, or whether we're now in a deeper setback situation.
Let's take a look at some of the stocks that have been stealing attention of late. Mumias Sugar, I mentioned earlier, one of them. Ever since its results release, we've seen that share price moving lower, but yesterday managing a 5.5% gain. What's your view on Mumias at the moment? Has the market finally decided that there was a once-off effect to actually take into account on that balance sheet?
I think, Mumias is a very high beta stock, so you get these very amplified price moves all the time. It's sold off heavily, as you said. It made some ground back yesterday. I think the market was a little bit disappointed because the first half really was a stellar first half, and we didn't see as much follow through in the second half as some expected. So I think we've had that bout of profit taking. On balance, I think it remains good value at a trailing PE now of about 12. With income streams yet to fully impact the balance sheet, the new cogeneration, all those kinds of things are beginning to filter through, but we've yet to feel the full force or the full positive force. I think we're okay at these sort of levels and probably move a little bit higher back to the 13 shilling mark, 13.50 mark.
Well, we've been reading that investors have really been positioning themselves in the industrial play segment specifically, especially the high divvy payers. Now, we touched quite a bit on the cement players last week, but we have utilities getting some recognition as well. We know that Kenyan is amongst the lot there. We know that it's looking to sell a 19% stake of the business to a strategic investor. Hardly any reaction to that news filtering through to the markets just yet. But what have you made of that announcement, Aly Khan?
No, that's a very valid point. I mean, normally if someone was offering that kind of number of shares, you would have seen a substantial price reaction like we did in KCB. But I think in Kenyan's case, we've got a transformative business. They've very much got the the capital with which to expand. They continue with the string of interesting deals that they've done, whether it's in geothermal or upscaling capacity. And I think on balance at this sort of price, investors are willing to support it, notwithstanding the deluge of supply, which is pretty much imminent. It looks good value to me, actually. It got hammered because of poor hydrology last year. You're going to see a strong rebound on the better rains in the underlying business as well.
So where we're effectively looking at Kenyan privatizing further, I mean, what's the anticipated uptake from a willing buyer perspective of that 19% stake?
Well, that's the exact question. I'm quite interested. I think we might see willing buyers pop up from all over the place. You've got this massive scale up. It's a cost plus business. It's really all about getting capex in. I think they've managed to do that. They've proven they can do that. And I think you might find some reasonably big accounts in this sector abroad looking at how they can position in this utility. So I think that's what's supporting the price. It's not entirely dependent upon the retail segment, of whom there are many shareholders in Kenyan. I think they're showing that they've got other buttons to press, and that's why the price looks steady.
The company has mentioned the possibility of a foreign bond, saying that a bond is an option, including one that they could issue outside the country. I mean, what are you making of timing here? Surely this wouldn't be an option explored anytime soon, given all that's going on in the global economic playing field?
I can't see that happening. I think, the first thing that needs to happen is Kenya needs to issue its Eurobond, and all things follow from that. I think this is a little bit of a jumping ahead of the curve trade. I can't see Kenyan selling a bond until the government of Kenya has done their Eurobond, and I can't see much of corporate Kenya issuing foreign bonds until that happens.
Well, talking about companies that are on this capital raising initiative spree, we've got Kenya Housing Finance joining this lot as well. It gets the nod for a $124 million note, and that to fund its expansion. What's your view on housing finance right now?
Well, I think, you've got Equity Bank as a key shareholder. You've got a housing finance in a niche that is actually performing extremely strongly, and we've got a massive housing shortage on a year-to-year basis. We've got housing finance playing in that field. So I'm reasonably optimistic about the business. Management, Frank Ureri and his team have been able to execute according to plan. You've seen an improving EPS over time. And I think what they're saying is they now need to scale up. And I think this is one avenue that they can use in order to scale up. Also, the differential between credit spreads and government of Kenya spreads is as wide as you like. And I think investors are all going to start to pile into the credit side of the curve. And what you're going to see is a compression in that curve. So I think housing finance is taking this opportunity to try and take that opportunity.
Aly Khan, this conversation has really come full circle here because, while there's been this increased investor appetite for corporate and government bonds in recent years, with what you were saying earlier on, where there's this expected, expectation of a rise on the equities front to emerge with all the value that's to be found there, do you see that detracting some capital away from the bond market that we've seen, the kind of interest we've seen in the recent past?
Well, I was looking through the South African Rand numbers. We've seen an explosive increase in appetite for African paper. I think it's a tipping point in that regard. And whether it's South Africa or Kenya, we've seen an appetite which very few of us really expected to see. So I think they're in a sweet spot. Will it affect the equity market? I think the equity market is fairly well supported around here, and there is enough liquidity for now. I think the government of Kenya, which got a free pass with this 3.2% further slump in inflation, are going to struggle to sell much more in these enormous sizes. But I think the appetite for corporates is going to remain.